see my screen after the fact. There's my face in there. There he is. All right. I should wear my Georgia hat for this. 12 o'clock game tomorrow? That's so silly. 12 o'clock? I thought it was originally 3:30. They moved it to 12? Is that what happened? Okay. Well, your first question is going to be on the NQ, right?
Right. First thing I want to talk about is the NQ. So let's go over this.
You probably need to mute. You need to go to the mirror room and mute that so you don't get feedback. Mullet Mania. The mute's at the top right corner of the. Say something now. I think you're probably good.
Yeah. Are you guys getting anything now?
Yeah, you're getting a little feedback. So go click on the tab you have the Premiere Room in and hit the mute button.
Are you getting feedback now again?
Okay, let me check. Say something now.
Yeah, you getting feedback now?
No, that sounds pretty good. Okay, there we go. I muted the other room on my end, so we're good. All right, let's roll with it, guys. Are we live? We're live, right? Okay. What are we calling it? Revenge of the Ticks.
Revenge of the Ticks.
Revenge of the Ticks.
Yes.
We have a podcast here from Liberty Trading Club, hosted. What was it? Sponsored by Liberty Trading Club. Whatever. It's all
hosted by Liberty Trading, sponsored by Liberty Trading Club.
It's all about Liberty Trading Club.
The results of Liberty Trading Club.
What time was that trade call this morning? We're going to review some trades. We're going to talk about some trade ideas. My name's Coach Brian. We got Coach Paul. My screen name today is Rodney Dangerfield. Mullet Mania also goes by Rusty.
I'm not quite as creative.
We're calling him just Mute because he talks on mute all the time.
Not on mute now.
He's not on mute now. And we're going to cover a couple trades we took this morning. How about that? I don't even know what Rusty has planned for us. What we're going to talk about, but I do know that we're going to start with I think that 77 trade call.
77 trade call. Let's start with that. But overall, we're going to go over levels, right? So this is one of the things that being new is the key thing, right? Is knowing where to call to set up your plan, because the plan is the biggest thing for the day, right? You set up your plan. You got to know where to trade from. We say it all the time. So those levels are what we need to do, is set up those levels. Now, there's multiple. I mean, with Liberty Trade Club, of course, you can see the blue and yellow lines that those are provided for us. If you're a member, if you come in for your 7-day free trial, you'll get to experience those, use those.
You're already selling for us.
But
sorry.
No, you're good. But so we want to, but also need to know too that those are real-time updated information that you guys do, right? So we need to learn as new, which is what I needed to go do, is I use those as a baseline to learn to look back, see what levels I need to put if I want to trade pre-market or post-market, whichever, right? So as you can see, Coach Brian's actually updating those right now as the price moves down. But so levels, that's what we're talking about today. We have videos that you can look at too. I know Lulu did a great video. Brian has a video that we can look at that talk about setting these levels. So with your trial, you can get that, just so everybody knows. But the trade called today. So there's many different things when it comes to me as far as learning these levels, right? So this call Coach Paul made today. I'm not sure how to share my. But if you
want to, but just tell me where to go to, and I'll go to the trade.
Go back to it was 7:53. Or
so
9:53. 9:53. Sorry, I got mine set. I was going to fix that after that faux pas yesterday, and I never did do it.
And that was a long call?
That was a long call off the 89.
Which was also 77.
Right.
It was also a 77 long, correct, Paul?
It was a 77 long.
77 long. Okay. Yep.
Yeah, there was a little
But it
more
was a
to
77 price, but it bounced right off the 89.
Yeah,
Right.
And
which
that's what I want to
effectively
talk
called it
about right
down.
now. Yeah. That's what I want to talk about right now was the fact that we talk about everyday levels, right, which are blue and yellow lines there, but the 89 is also a level, right?
In
And
itself, it's
in
a self-fulfilling
itself,
it's an
prophecy.
actual
right,
entry for us.
right. So here, when he called that call, I was like, okay, let's look at this and kind of, do a post-mortem on this call, because as you see it at 951, it starts down here at the 940 level, right? We're right in that. And then it bounces up through the 89 around the 751 time, right? Comes back
951.
down, bottoms out at the 752.06, right? Then he calls it as, look, keeping an eye on this because this could be a trade, right? And then
Well,
it bounced up, and then he called the trade for that long right there. Is that right, Coach Paul?
yeah,
Yeah.
yes, you are right on the premise. There's a little bit more to that from what I was looking at, but yes,
Uh-huh.
the idea for me was if you to go back a little bit before that, because I called the 77 short
Yes.
beforehand, because
Yes.
we were looking, our bias at the time was shorts.
Shorts.
Coach Brian
Right.
was talking about that, and I was looking for a proper setup. And if you look at around 950 ish, it comes
Yeah.
down. It comes down and makes a double bottom there. Came back up. It overshot that 89 a little bit. I was looking at it in a reverse, coming short, right?
Right.
But I said in the room, I said I will take this 977 short if it gets up there. We took
Right.
the short. The short did play out, and it was actually a winning trade. But at that
Right.
point, when it reversed back up, look at your 89. For me, this is what I was looking at. My 89 starts curving up, right? We're about to get
Okay.
an imminent curve. It's going to cross at some point. It's going up that way. It goes up, breaks that prior swing up here at what is it, 500 at 2,500?
Yeah,
At
right at
25,000?
right at that.
Breaks that prior swing. At that point, that's when I said in the room, I said, look, we need to reverse our thinking here. If this pulls back to the 7, I said 77, but the 89 is fine because they were both right at the same level. I said, if this pulls back to the 77, we need to think about going long.
Right.
And so that was
So-
why we took.
When you started that call, and I looked at it afterwards, so you've got at the top of this, at the, what is it, our mark there, it's a 2510, right? 25010. That's a bounce that bounced back down, and that's when you started that. You actually made the call right here, because I marked it on my screen at like 7:53, right? Time frame, or 9:53 time frame, and then we rode that all the way up. But so there's many key levels here. It passes through the 89, comes up to the 2509, right? You make the call for it to come down and say, this is a first touch, is what I'm getting at, right? Is because it come back up through the 89, bounced off that resistance, boom, hits that first touch, and then we were off the races for what? How many ever points it went up to at 758?
Yeah, it was a nice run.
It was
Well,
a
yeah,
nice.
I mean, it's one of the things we teach at Liberty, right? It's what I was looking at specifically. Okay, was again, we have to go back. We always talk about we look left, right, to trade right. So that prior to that, we were thinking shorts. That's why we took that 77 short. And then at that point, I'm looking at this 89, and it's the divergence is starting to close, right? It's starting to, it's crossing. It's about to cross the 200. Okay, that technically our trade is after the cross, but again, this is one of those things where I've just been doing it long enough to know. I've seen this pattern set up so many times. As when it went up and made a higher high, and I see the 89 was crossing at that point, that's when I said we need to reverse our thinking on this, because this was going to come back. So when it pulled back, I was literally just looking for a way to get in this trade long. And
Right.
where's my entry? Off my left, off the 89.
So and can I add all of that together? What the first call was actually you told people to wait for it to go back through the 77 on the downside.
Correct. I said let it break up and then
Yeah.
take it if it passes back through the 77 to confirm the continued down.
And the 77, we're talking about 77. Let me explain that, or Paul can explain it. 977, 877 doesn't matter on NQ. 777, and 26. Those are levels in itself on the NQ. They're built-in levels. They're
Right.
fib levels that work on the NQ. They're just built in. Paul, if you want to explain more about that, that's something that people probably should know that we're talking about why we're keep focused on 77 so much.
Right. Without, I mean, obviously, it'd probably take a little bit longer than we have time in this podcast, but in general, like you said, those are solid levels. Between every 100 handles, every 100 points on the NQ, you can mark a
25,
77.
900.
Yeah, you can mark a 77 and a 26. And what we look for is reactions around those numbers. We don't blindly trade those numbers, but we expect the NQ to react in some way, bounce, reverse, whatever, around these numbers. So we take those set numbers, add that to our methodology, the things we look like, the levels, the support resistance levels, all the 89s, everything that you guys were just talking about. And then we put that together, and that's how we formulate our entries.
Which is key for everyone new to this, like it was for me. In my coaching with Coach Paul, he taught me that, right? He showed me that. Then put it into action each day in the main session in the morning session room. That's what there's so many key levels. There's a level on our screen right now, on Coach Brian's screen, with the blue and yellow outline there, that shows where it was going to bounce off. And then there's other key levels, whether you lay a Fibonacci retracement over it, there is indicator that does that as well. And it marks out the 50, the 77, the 26. I bring in the 50 because there's a rule that it needs to come from the 50. But that's a little bit more advanced than what we want to get into today. But the main thing I wanted to show here was there was the level at the 77 that Coach Paul called. There was a level shown on your screen that is part of the Liberty Trade Club package that bounced off it. You can see it perfectly just to the left of the EpiPin there that we call it. You can see that, right? And then it comes down as a first touch off another key level that we teach, the 89. So when we say levels, it's not always looking back and setting up levels before we ever get there is the key thing, right? But yet, as your trades play out, the levels start to develop themselves, right, and come into it. That's what I got away from this morning, what I took from the session this morning. And that's why I wanted to talk about levels and how they all work, because it's a dynamic thing, like you guys said.
What it is,
take 4 hours to do it, but the basic, we got to look back, and I'm going to ask Coach Brian to do a short look back and what you look at, because one of the key things I learned from Coach Brian is just in one of our rooms yesterday afternoon is he not only marks a key area to trade from, he'll mark key areas, that have bit him in the past, that something's not right at this area. And the funny thing is yesterday we were trading it live, and he's like, "Oh, Rusty, right here, we'll do, this is going to be good." We said it, and it bit us. And he's like, "Darn it, it was right in my area where I've had issues in the past." Where it's done me wrong in the past, right? So not that it is good as a good valid entry, but there's also times where you learn, I don't really want to take this trade in this area too.
Yeah, that's it, and that's still, it's all about knowing levels. If you again, this is a saying that I have. If you don't know where you want to trade from before you start trading, you've already lost. You've already lost on the trades. And I like that. I somehow the AI pulled that out of one of my presentations, because I never say the same thing twice in my presentations. But somehow an AI pulled that out in my presentation, and the idea behind that is that you've got to know levels, whether they're levels that are developing in front of you or the levels from the past. I'm going to use this example here on the NQ from this level that we ran into this morning on the NQ, and I'm just going to show you kind of with the pin here. One of the things that you want to think about, because, and I did it earlier on the ES. I can show it on the ES or the NQ. It doesn't matter to me. But there is certain types of price action. So obviously there's a level up here that we know. We see it right now. But this morning we did it live. There's this level here that I have marked off on the chart. That's a good level. And then there's going to be another level, probably about where I have the zone at here. So we're going to focus on this area. But one of the things you can do just with levels and knowing when price gets to a level, one of the big things about knowing levels is you should know what to do with price when it gets to your level. So that's a topic we can really hit on today that I think is more important. Teaching levels, that takes forever, but knowing that these levels happen in the past, and it's all about what we were saying earlier. Looking left, we say look left, say right. So the point I'm trying to make here is that there's a certain price action. This NQ is swinging between in this area, swinging between, I don't know, 940 and somewhere up here around 25, 30, 40. So about 100-point swing right here. Now, interestingly enough, if you can look back, and this is what I did this morning, and then I'll go into the levels more, but keep that in mind there, that we had that about 100-point swing in this area right here. And all I'm going to do is take the chart and slide back. And there's another thing about this too, is why are these levels so far apart here compared to some of the other ones? Because that's where the trades are happening. So what you really are looking for is where the big boys and girls are taking trades at. That's the biggest thing about levels, is you don't want to get caught in. There's a saying in trading. It's called "don't diddle in the middle." Now, the last time price came here, guess what happened? Huge big swings from these levels.
Let me
So
interrupt
we
you here for
know
a
it
second.
reacts. What's that?
Let me interrupt you here. Just everybody know that, like, you see the little, I don't know, it looks like he's drawing a submarine here and some sitting on the water boat, right? Let me know that, and we always joke Coach Brian about this. But did you see what he just did? He took a present time frame that we're trading from right now, drew this, moved it back, and it matches up. This is a valid way to do this. This is if you're starting, this is a valid way to do this, right? So just know that, pay attention to the, for the folks that are here, because I do all the time, of how he does this.
Let me do something fun. I'll do something I actually did this morning. I won't even do it. This is what I actually predicted the price action from. Remind me, it was back around. It was somewhere around the. Oh, it was back here. Okay, this is perfect. Right here. It was when we were first starting this morning. I look back. Tom, somebody asked a question about levels, right? It was Tom or somebody. I said, look, all we have to do, and price wasn't even here yet. This was what, probably 9. It was like about 9:15. So we were somewhere around 9:15, and I said, okay, we're right around 9. I started talking about this. Where the support or resistance, that level should be that we have to break, and it was somewhere around this area. And I did it on the ES, but the same thing on the NQ. It was right around this 25 100, which is what I gave you guys this morning as a level, 25 100. So I'm gonna just kind of circle this area around 25 100, and before price got here, let's put it this way: before price got here this morning, what I did was, we weren't even here. We were at we couldn't even see the chart here. We were back here, so we're at about 9, maybe right around here. Sorry, a couple minutes further. So we were sitting here right about this price level, and one of the members, Tom, asked, okay, how do you know that that's a significant level? That's what he asked, right? And I didn't know. I didn't know where price was going to go. I said, well, simple. I'm going to go back. So I got to match it back up here. And again, this is one of those things that I did before price got here, guys. Before price got here, I said, well, I know this is a different level. If we stay below 25 100, and I said it how many times this morning? Maybe 10
Quite a few
times.
times, yeah.
If we get below 25 100, I am selling. I'm selling everything. Okay. Now that little rally bit me, but I made pretty good money below 25 100 with Tick Century in it because I did this one little thing here. One little thing is I knew I had again before Price got here this morning. All I did was went back all the way back to when Price first got up here, and I said, I want to see how Price reacted to that level. Now I did this for my homework, but I did it in front of everybody because they asked, and I'm a nice guy, and I show you what I'm thinking. Sometimes I'm a nice guy. I was a nice guy yesterday.
Every now and then.
Keep going back. Let's just squeeze it in a little bit more. There we go. And so what I look at is I want to look now. This is Globex. I don't really like it that much, but I'll show you another time that's a little further back. But this is the first thing I do is I go back and I say, okay, if Price is down here, what happened the last time Price was here? I want to see what they when I say they, it means the institutions, what they did with Price. They stalled Price, they sold from here, and they bought from here. Do you think that could be a solid level that if it stays above it, they're probably going to buy from it? If it stays below it, it could retest and they'll sell from it. The chart says yes. Does that make sense?
So clarify that again. I just want people to understand. Like you're saying, if it reaches it, and it stays below it, they're gonna sell from it. If it goes above it, they're gonna buy from it, right? So you're talking two-way trading off the same
level. Right.
Right.
You know, the old saying, support becomes resistance, resistance becomes support.
Right.
That people talk about that in higher time frames, but if you really look at a intraday trading, especially clarifying that we use a tick chart, we don't use time-based charts. All I care about is levels. I don't care when Price gets to my level. I just want it to get there for me to trade. We'll take the short I did on the ES after we dropped below 10. It retested 10. I took like a 15-point short. And everybody's freaking out that Price is reversing. I'm like, no, 10's a strong level. 10 is the same level to me that this 25-100 is on the NQ. That was the ES 6710. And I did the same thing on the ES this morning. I just went back and looked and said, okay, what happened when Price first got here? And actually, if we really want to look when Price first got here, that's exactly what happened. They first sold from this level, and then when Price broke through it, they started buying from this level. And the same thing happened in the past. So the point that I'm trying to make here is about levels is you've got to be diligent enough to say, okay, where is Price right now? And what happened in the past when Price was here? If it was, humdrum, don't do it, just Price moving. And this is where most people get it wrong. They're looking for Price to move. I'm looking for Price to stay there. Does that make sense?
Yes. So and why I wanted to really point that out is you're talking, you want to point out the price and you want it to stay there or go there, whatever you just said there a minute ago. I understood that it's hard to get out, but the thing is what I want people to understand as new as like I was is I understand the level, but the key thing that for me was, okay, there's level there, was that what you just said a minute ago is if it stays above it, it becomes, resistance, right? Or support. If it goes below it, it becomes resistance, because I didn't understand that until you explained it to me.
Especially,
because I'd look at a level and go, yeah, there's a level there, but what do I do with it, right?
What was that, Paul?
No, I'm just listening.
Oh, I thought you were saying something. I heard something else chime in. So, by the way, this is good stuff, guys. I think we're doing pretty good here.
Well, it's the stuff people need to know.
Yeah, they need to hear this. We got to do this more often, Paul. Like on a regular basis. This will attract people like nobody's business. But the thing, here's two things you look for.
Let's
guys.
Talk afterwards. I'm serious. Let's
so two things you look for, and again, big reason for using tick chart, and you can use higher time frames. Let me go to maybe a 15-minute chart on the NQ and show you guys some of the similar things. What you want to see is you want to see price stay at a level, and you want to see it act like a. All right, let me use a 60-minute chart then. You want to see that level act like a magnet, but you also want to see time spent in the level or contracts traded at that level. Don't worry about my little drawing here, but this tells me when price gets here and stays here for a period of time, there's nobody on the planet that can hold price at this area or level, if you will, other than institutional trading. So what do you think is going to happen when price comes back to that level? There's going to be a reaction to it. So you've got this area right here, okay? And then you got price coming back to that area, and guess what? It reacts. Boom, takes off. Price comes back to this area, and it stays there again. There's, again, only institutional trading can do that, meaning that they're adding a ton of contracts. And one of the things I teach, and Mullet Mania hasn't heard this before, but if you're an institution, you're not just trading the futures market like us retail traders. You have huge positions. Think about if you're Goldman Sachs, how many equity positions you have and derivatives of all those equity positions that you have. You see what I'm saying there? We're talking millions and millions of positions that they have open. So they have to predetermine how they manage those positions. And the function of hold on a second, I'll just have another winning M&Q trade here for another $100. Told you I'd get that thing up to 600 before we're done.
You pass that thing in micros.
In micros too, about 600 in micros today.
There's no money in micros. What are you talking about?
I'm gonna do that one more time too. Take a shorter target here. Give me 1 second. So one of the things I talk about is for Mullet Mania. If you really think about this the right way, we have to be cognizant, even though we're only trading the futures market, we have to be cognizant of what is happening in the other markets. And moreover, think about if you were an institution, what would you do? What would you do with the futures market? Would it be more of a hedge for you, considering the fact that you have way more positions in the equities markets than you have in the futures market, or would it be a tool for you to be able to adapt the markets to the levels you need? Because again, as an institution, you can't just trade in and out all over the map here. You're not your institutions aren't building huge positions in areas like this. They're not building huge positions in areas like this. They're building their positions in areas like this. And it's not just, does that make sense?
It's not just on a whim. It's just not a guess. They've chosen areas
No,
to
those are
build those bases, right?
Right. They've predetermined a level that they want to trade from. And this is why levels are so important. And I can show you other ones back here. Here's another one. They predetermine these levels that they want to trade from. And even here. So they predetermine these levels that they want to trade from. And our job as retail traders we have to understand that to go finish the concept here is we have to understand that they don't really give a what if the futures market makes them money today or this quarter. What they care about is that the positions they have to hold long term make them money. So does that make sense? So again, you think about derivatives of derivatives, you think about all the stocks out there, you think about all the mutual funds, all the options, all the bank held derivatives. I mean, you get to millions of positions that an institution can hold and will hold in a very short period of time. So
Right.
you get that part, right?
Yep, get that
Okay.
part. Now,
So
go ahead.
go ahead.
But
Well,
give
to
me
finish
time
this
for
off,
a couple questions.
yeah, to finish this off is knowing that then the futures market becomes a tool for the institutions to get money grabs. And the thing that stalls the futures market isn't them trading the futures market. It's a result of them having to build those positions in other markets. And then all of a sudden, this tool, the futures market, gives us a lot of ability to say, okay, this is kind of like a peek through the veil. And when you say, okay, well, price stopped here, maybe, just maybe next time price gets there, if I could be patient enough, because retail traders spend too much time chasing this stuff in the middle instead of waiting for price to get to here or here. And that is why levels are so important. If you can wait for that price level, and yes, there's a bird. If you can wait for that price level instead of chasing in the middle as a retail person, your P&L is going to go through the roof. There you go.
Right. And it's one of the it's very important was for me to learn, especially we talk about, you know, your emotions or psychology of trading, and the FOMO thing where Coach Brian just pointed out there, like, you know, hitting that trade, that's a good trade setup, but you now you're fear of missing out because you missed it. Know that those levels, if you see those levels, it really helped me to say, I'm not going to FOMO into this just because I want to get a bite of it. There's a level, I looked back and I see a level. There's a level here it should bounce. When it bounces and it still has the momentum, which I want to talk about that in a minute, it still has that momentum that you wait till that it hits that level, you get a little stop, bounces up, then you make your entry. How many times we do that today? 5, 6, you know, on some of these long runs today. Let it bounce
Yeah.
back, take your entry there, and then catch the rest of the ride, right?
Yeah.
So
Sit back and
for
ride.
those knowing those levels also help on the psychological part of it. Like, I know not to get this FOMO and just buy in at the middle of this run. Wait till it bounces, right?
And
And then
that
take your trade.
and that's it. And us teaching levels, and look at it objectively on this chart. With the reason I teach levels the way we do, and the way, and Paul's great about looking at momentum, looking at the 89, and I'll let him talk about that after I'm done here. But really talk about these levels, and again, maybe next time I'll actually teach some on levels. Um, I'll teach how to find these levels. But the biggest part is go back, look back in time, and find areas where price stopped. That's all you got to do. Price stay there for a while. If that's all you do, you're going to find pretty decent levels. Um,
Right.
but then you have planned your trading events. We know that price at some point is going to come back and revisit a level. Even if it goes through a level at some point, it's going to come back and revisit. You get a good opportunity to take a trade then. It goes through the level, but it comes back and revisits it and says, okay, good opportunity for a trade. And that's the biggest thing about using levels, is knowing it gives you the ability to have that patience to say, hey, it's going to come back to a level and push back down. And
Right.
we just watched it real time. It played out to the level. I mean, I put these levels down here before price got here, just a few minutes ago. I put it down there, and look at what happened. It come back, revisited, pushed back through.
Right.
And that's going to
So
happen
let's
so often.
right. So let's talk about you talked about it, and Coach Paul probably be able to answer. I'd like him to answer this. You know, since you said he's kind of the momentum guy. Is like at the end of our session today, we talked a lot about levels today and how they were. You know, then we started switching to ATR. To me, when you guys started that, in my mind, I was like, okay, levels. You got a 747 goes up, flies at 32,000 feet. Boom, it's all good, right? And it has normal engines on it. We've all seen an airplane, right? Then you got SpaceX, which, you know, you got rockets. And to me, that's kind of like what ATR is. I want to know if I'm crazy or what, but the ATR, you know, a rocket engine's, you know, million times stronger than another engine to get you up into space. So if that's not convoluted enough, but what I'm saying is the ATR also is a power, or a power, I don't know if that's the right word, but it can, your levels are there, but when it has that ATR momentum and the ATR is, you know, large, it going up past the level to come back for that retrace and going taking off again, that's
It's a
affected, right?
volatility model.
It's a
It's a
volatility,
volatility
right?
model.
Yeah. So the airplane rocket, you know, comparison is in the ATR as high as it was today, man, you could just see it pick that. Our levels were there, but it would just shoot up above them a lot before it'd come back down, and then we settled in and we took trades from there based on calls, right? So can you explain that probably a little bit better than I can, Paul?
Yeah, I mean, the ATR is a factor, right? We have to factor in the average true range of the market, because again, when it comes to those levels, um, they are strong levels. But if the market is, you know, if the swings in the market are huge like they were today, I mean, at some point I think the ATR was up over 50. those are big swings, and these levels. And I say this a lot, and Brian, you can back me on this, but as good as we are with our levels, and I have to say we're pretty darn good with our levels, at best they're still a guesstimate, right? We don't know exactly what's going to happen at these levels. We can pretty much determine that there will be reactions around these levels. So we're okay with the market overshooting or not quite getting to a level, but you have to factor in your ATR, because again, like today, great example today, people were getting beat up because why? You are trading a volatile market to begin with, the NQ in general, and today is an extra volatile market. You have big swings. You're trying to trade it as if it were the YM or the ES or something that's not moving. And you're getting eaten alive because your swings are high. So it's really just combining the two. I think ultimately the levels are the most important thing, obviously. And then once you master the levels and how the market reacts around the levels, then you factor in the volatility of the volatility of the market, which is basically the ATR. And you have to ask yourself one of two things. Today was a great example of that. You either had to decide to not trade and tell yourself, look, this is too expensive a market. I can't handle the stops in this market. And if I lose, they're going to be too big a loss. Or you size down, right? You size you trade a micro. You trade one micro instead of, two minis. And it's called situational awareness. You have to understand what the market is doing and then factor that in.
The NQ is about to bounce at a level right now. And then we're going to do this. I'll show you guys in real time. This will be easy enough done. NQ is probably about bounce. You're at a level right now. How do I know that? Well, we looked in the past. We found this in the past. Or it stalls for a minute. But then we're going to end up seeing price go to just knowing levels. And to speak, price should go down to around 7. Again, right around that 726 area. So we'll see that in just a couple seconds. 726 will be hit here on the NQ.
But now hear him out though. There it goes. Actually, boom, it's about to hit it. But to address what I was talking about, we know that, right? So we have confidence that that's a good trade. Now, but you also have to factor in that you got a 30-something ATR. So you're not getting in this trade short with 5 or 10 point stop, because it could easily wick up 30 points and then drop down to 26. By the way, it just hit 26.
Now watch it bounce. If it doesn't, then fine, but it should bounce right off this. But I was going to back you up, Paul, on what you were saying with ATR and what we talked about earlier. You got to have, and Paul's really good at keeping track of this, momentum and ATR. Is the market too risky? The big thing that we try to teach people is if this is an easy look at. So look at this. This looks like for a newbie or trader that's struggling, this looks like easy money. It's not. It's not easy money. We had huge ATRs back through here, and at some point the average candle size was 50 points.
There's your long.
Think about that. It looks like it's easy, but that's a nightmare for a struggling trader, because the market says to them, to their eyeballs, they're looking at it saying, oh man, I'm going to make a ton of money today. And all of a sudden you blow 5 evals, you blow 5 PAs, because you don't realize one thing. Inside of this easy looking money, there's this move happens in seconds flat.
So, and I guess to play on a little bit more, I think the question you were asking is to take off this level, literally what's happening, playing out in front of our eyes right now. The best way to trade that level, which we know that's a level for us to trade long, there's the winner, right? How would I have traded that? On a day like today, with such a volatile market, such big ATR, even this late in the morning, I would have let it break down through the level, decide whether or not that's going to bounce there or not. I don't have a buy waiting right at that level, because it could easily just blow through that level today because we have such big ATR. So let it break through like it did. Let it bottom out, come back up through. I'm waiting with a buy stop at 77. And I took that trade, by the way. And as you can tell, long. That's a really nice winner right there. That's a
good win on it. But if you know this in advance, there's two things to tie this together for Mullet Mania and everybody else. When we're tying this together, if you can put the levels and you know the levels, and then you know that volatility's high, like Paul said, volatility's high. ATR means it's highly volatile, high ATRs. That's and then you add in that you know where you want to trade from, or even momentum. Trading with it, you should do most of the time, and it should short now from this level. Um, you can trade a higher ATR or higher um, volatile volatility market if you know how to get into it. And like Paul said, you can't use small stops, and you should be probably using in a market like this micros.
No, with that,
So
I
yeah,
traded micros today, and I mean, I traded micros today, still up very decently with micros.
Do
I mean, I
we had a
traded minis.
member almost $1,000 profitable in micros today? In
Like
micros.
four members were
Was
right at
there?
1,000
Okay.
in micros.
Yeah.
Four of
I
our
mean that
members, $1,000
so
micros.
people that say, oh, micros, for those who don't know micros, it's basically taking your minis, divided it into 10, right? Like, and you can buy them at a smaller amount, in increments, smaller increments, right? And so you can do that. The other thing I do is I'm still like, it's like sometimes in the morning right after the bell, it's like drinking from a fire hydrant to me. So I just switch to sim, and I follow the trades, and then whether I get bit, I'm learning, but I'm not getting bit, right? Then when it slows way down, then I start trading and taking what I've learned from the day.
And
But
that's smart. That's just
it
smart stuff to do.
it's what you can do. But the great thing is it's what you can do. You can still trade the day, you know, with whomever, whether Liberty Trade Club, whomever, your coach, whatever, and still do that. So that's the great thing, and not feel like you just have to, we call it sit on our hands, which we just wait, but you can still trade and learn without getting hurt, then go in, trade your micros.
Hey,
Either way your person feels comfortable. But I didn't know nothing about paper trading until I decided to go down this path, and then I'm like, and got bit on a live account, and then realize, oh, there's such things called paper trading. Well, I can trade paper and learn this, right? So,
hey, guys, I'm gonna have to jump off because I got a call I got to get on. But this was cool. We need to do this more often. I like it.
all right, man. Appreciate
Yeah.
it, Paul.
All right.
Thanks.
Thanks, guys.
You're muted, Brian.
Oh, I said thank you, Paul. Sorry, I'm muted. Thank you for telling me I was muted. So I was going to finish this off with a little lesson here, and what just to talk about the levels we were talking about. Give me 1 second. I got a position I need to close out here, um, so I can focus on this. Only another $179 in micros. So here's what we were just talking about. Everybody saw me put these levels on the chart before. Oh, I messed up the size of that level. No wonder it's wrong. Um, let me fix that real quick.
Yeah, before we get off too, I want let's jump over, because we've talked about tick century a couple times. So for some of the newer folks, we need to show, it comes with the 7-day free trial, but show what the program is when you refer to tick century and you just made another $100 on micros. So they understand,
$179.
okay, the context of that when they watch this and go, hey, what is this tick century thing? So if you can just do
You
a
want me to
little
spend a couple
rundown
minutes
through
on
that.
that?
Yes, please.
Okay. Well, look. So we let me show this real quick. So what I was talking about is we knew these were levels before price got here. So we literally can predict to an extent what price is going to do. To an extent. So when you're talking, how do you use this in trading is what I want to say is wait for price to get to your level. We like to use little patterns to enter, but to enter the trade, once it gets to your level, then you put some criteria, maybe stochastics, maybe like an HMA hook. But the biggest thing about trading is too many people use indicators as a crutch. Indicators should be a confirmation that you can take the trade, not a indication that there's a good trade there. Okay,
Right.
your levels are where you're going to find the good trades, and then you can use indicators once it gets to a level. I like to say that when I talk about levels because levels aren't sexy, indicators are sexy. So that's just one of the things that I like to say. So
Well,
Tick Century,
before we go off to that tick century, that's one thing that, like, on the next podcast, I really want to talk about that too. We've gone over levels, right? Then once you get there, I want to go deeper in depth into that at some point too. Is once we get there, what do we do? Because I love the boxes you draw, and you say if it goes this way, it goes this way. I mean, because everything boils down to get that key level. If this, then that, right? And
right.
that's something I want to get into in one of the next podcasts.
So yeah, we'll do that. So write that down. We'll do it. We'll do that next time. If because I'm big on doing if it, you got to have if then statements. If this happens, then you do this. If it doesn't happen, you don't do anything. You don't take a trade. You don't do anything. If X happens, you do Y. If price, and this is a big one I always do, is if price gets to a level, if price gets up to this level and makes an M, I might want to sell it. Why? Because it did it before.
Right.
So let's cover that next time. So Tick Century is a tool we built here that has a built-in moving average with some. We have some slope factors in, a little algo in the background that works with it. But basically, what it does is it gives us a good bias in the market, long or short, and then you follow that. Obviously, we got a decent little short bias here right now, and it'll tell you when there's a neutral bias by alternating from a short bias to neutral to a long bias to neutral to a short bias to neutral. At that point, you're telling yourself this is a neutral market for right now. Also, the slope built into the program of the 89 will tell you how aggressive you should be in your trades. Then this is built on the old martingale thought process of grid style of trading, but we have a lot of different tools built into it, meaning that if you're looking to scale into trades, and then we do this with micros because you probably don't want to be scaling into the NQ with minis unless you've got a huge account, or the ES as far as that goes. Now I will use Tick Century to add to trades, but that's a little more than we have time for today. So
yeah, let's keep this like a 10,000-foot view of tick
yeah,
century, and then we can
yeah,
dive
so
into.
what we're trying to do is we build a program that takes into a grid style of trading, but it also takes factors that we use into account, like levels. So when you add our levels on top of Tick Century, now you're able to get some really powerful stuff in the sense that you're going to see price is about to take the target for me. So
Man, we couldn't set this up any better, huh?
nope, did pretty well.
You need to let that buy that so they can see it. Never mind.
What's that?
I was gonna say you should have let that buy it so they could see it.
Sure.
No, you're
Dude,
trading, dude. Don't need to do that.
make money. There's $210, and I don't know, since we've been in the podcast.
And this was set it and forget it. I mean, for the most part, you said it.
Yeah.
You just kept an eye on it. You looked at it on another screen. You're trading real time on ES or NQ.
Yeah.
This is on MNQ. You look over there. You make sure that it's doing its thing, and you basically passive $210 with this program.
While we've been talking.
Why we've been talking. Yep.
Yes.
And we've been what, 30 minutes, 35 minutes, something like that.
And yeah, and the beautiful thing about this is, look, if you know levels, and then you add in some bias, short or long, and then you add in there took another contract there, and you add in the thought process that I have the bias, and also know kind of where I want my trades to be added at. So what we typically do, again, martingale grid style system built on, but then we have little things that happen here all the time where price, we call it the money line, but it's the 89 exponential, where price will often react to that 89. So we have that built into the system, so you can actually start scaling in. It'll automatically scale into those trades around that price level. We can also have a reversal built in, so often the NQ will reverse, so it will automatically, if you have this turned on, it'll automatically start scaling into a reversal pattern for you.
Right. Okay.
And then at that point, once you're in a trade, maybe you get one contract in, then you adjust, or even if you don't have them in, you just adjust your limit orders to the level you want to add contracts at. That's it. It's really that
Once
simple. It's
right,
not a
once again,
complicated
back to the
program.
level. It's all based on levels. You start the
Wait for it to
program,
get
but
back
it's
to level.
based to
Yeah.
levels, right?
See, like for right now, I probably want to take a shorter target after this has pushed up, somewhere in the middle of this level, most likely. If it gets
Right,
another contract, then my average price is going to probably be around 738, 740.
right.
That would be my average price. Well, I'm filled at 726, so 738. Yeah, probably. If it grabs this contract at 50,
So
at
just
750.
make sure that I'm thinking right here, right? You to clarify this, like you move that stop up. The reason I think you move that stop up is when we say levels, there are levels, but they're really a range. Ultimately, there's a range
Yeah,
where
there
that
you go.
level is. And
Yeah.
so you're like, okay, if I want to get out of this trade right now, I'm going to move it up in that range a little bit further instead of just below it because it could come into that range and bounce. Now we got a higher probability of it bouncing in that range. We don't know the exact number where it would. See that you moved your stop up perfect, boom. You sealed in the money on that trade, right? And
I don't want
so
to
I
do
just
that.
wanted to clarify that too. When we say levels, there's levels with a range. Here's the
Yeah,
level. Now let's range this level a little bit to cover the area where it could be, depending on such things as ATR and volume, et cetera.
right.
Is that correct? Am I going down the right?
Yeah,
Okay.
again, price will if when this is a quote from one of our members. When you know levels, price will always do what you expect it to do, but it will typically do it in the most unexpected way.
Right.
So you can't and most people, these gurus out there, they give you exact. Oh, I'm going to enter exactly at 716 and 75 cents.
Right.
Okay, that's still a guess. They don't
Yeah.
know. And then when they get it big, I don't want any more contracts right now. I want to wait for a little bit before I get back in. But that's a guess. And when they get it right, they pump their chest and say, "Oh, you got it right. I'm a guru." No, nobody. You don't really know that. Price is going to overshoot levels. Price is going to move. The markets are manipulated. People, you got lucky by picking an exact price. And the biggest thing about knowing levels is we call it levels and not an exact price because it's going to react around a level, considering the fact that we know the market's manipulated. And let's be honest, the institutions don't want to hold price at 716 and get 50,000 contracts filled. Then it would be too easy for everybody else. Does that make sense? So
Right. Yep.
that's why price is good. That's why it's got to be a range. It has to be,
Has
and it just makes sense to do it that way. But then you add in, and this is why I say you've got to add in factors to tell you, and it actually happened. Do I want an M to enter the trade? And that happened, and you could get in. Or do I want a
right.
little breakout pattern to take long, like Paul took the 26 long? Do I want to see a little M here for a short? And once you add all those factors together, and it's not complicated, know where you want to trade from, know what the pattern looks like that says you can enter the trade, and then know how you want to manage the trade. That's all you have to do as a trader. And it
Right.
starts with knowing where you want to trade from.
So one last point on this, and then we'll wrap it up here before it gets too off long. But
Yep.
the this we're right now we're at 12:15, right? Close to it.
Yeah, yeah.
12:15 in the day at 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 the market, right? You notice he's doing this right now. This works any time of the day. It's just a little slower. Okay.
Anytime.
So anytime. Trading the way that Liberty Trade Club trains us to trade can do it. I was trading last night in the Asia time frame, right? It's slow, but I learned a lot from it being slow. And you get the crossover from London and
Hmm.
in New York, sure, it's crazy. All bets are off. Let's make some good money. But what everybody needs to know is that you don't always have to trade those times. You can trade these setups, ticks entry, everything, anytime. So when it
Anytime.
suits your time, if you work full time and you only able to trade that early Asia session after you get off work, then then so be it, right? You can do this.
Yeah, I mean that's the biggest thing is if you know the process and it's a function of process and not pressing buttons. It's it
Right.
the trading should be for all intents and purposes, boring. It should be do the same thing over and over and over. That's what's going to make you money. Guessing that this market's going to keep going up and trying to press a buy button right now, that's not a process. Saying, I know that there's this good level. They traded from here in the past. There's probably a good chance that we get a little tiny M here and price comes back down to, guess what? The next level. And if you can do that over and over and over, you become a money making machine in the markets. That's all you do. And you know, to end on this, and I always like ending on this when I do stuff like this, is that people get too greedy with markets. They think that the market should pay them, and they end up losing accounts and losing money. And the market doesn't give a hoot about you and what you think. So stop thinking the market's going to do something and start looking at what the market did and making judgment based on what it did before. And then you have a process. And then you follow the process. If it doesn't turn around and go back below this point right here, I wouldn't press the sell button. That's it. If that happens, and that's what I was saying earlier. So people try to force the market to give them money, and that's why they lose money. I always say take what the market gives you and nothing more. Take it. Take what the market gives you. If it's $100 that day, be happy with it. If it's $1,000, be happy with it. Take what the market gives you for that day. And I'll end on that. I think that's a good way to
All
end it.
right. Yes, it's a good way to end it.
Mullet Mania and Rodney Dangerfield here for you live for what we're calling again? Revenge of the Ticks.
Revenge of the Ticks.
Revenge of the Ticks. There we go. Thanks, guys.
All right, have a good one.
You want me to meet you on the other side?
Yeah, please.
All right, cool.